Okay, last question. We've got here, Karen has the following information for the last financial year. So we've got here information on calculating tax. If you read these bullet points here, I think are important. Total income for the year is 24,000 from pension scheme. Okay, so she earned 24,000 from a pension scheme, and she also earned 20,600 from other work. Her personal allowance for the year was 7,475. Karen suspects that she paid too much income tax for the last financial year. The amount of tax Karen actually paid was 20% of her total income. Check whether or not Karen's suspicion is correct. Okay, so first of all, with these questions, the important thing to calculate at the start, or to determine at the start, is what Karen's total income actually is. Okay, they don't actually tell us. Okay, they don't specify her income was. They've actually split it up here. Okay, so we need to work out her total income. Okay, it's not difficult to do, of course, right? But important that we put every step down so we're gaining marks. Okay. The other thing to remember as well with these questions, they often give us marks on communication with these questions. So make sure you're clear in your steps. You annotate everything. You say what you're actually doing, right? So here now I'm going to work out Karen's total income. And she earned income from different sources, didn't she? She had 24,000 from a pension and 20,600 from other work. Okay, so when we add them together, okay, 24,000 plus 20,600 comes to £44,600. That was her total income. Now, as it happens in this question, we can actually work out how much tax she paid straight away, because if you look here, it says the amount of tax Karen actually paid was 20% of her total income. Okay, so this is quite simply 20% of this. Okay, so if we work out 20% of that, so 0.2 times 44,600, we can get how much she actually paid in income tax. So 8,920. Okay. So Karen actually paid £8,920 in income tax. Okay. Now the question is asking, did she pay too much? Okay. Right. She thinks she's paid too much. All right. Because that's how much she actually paid. To work out how much she should have paid, we need to follow these steps here. So we'll see if she has paid too much by following those steps. Okay, so information here we're going to use, really important. First thing is this formula up here, taxable income. It's really important to realize that taxable income is different to the total income that Karen receives. We've already worked out that her total income is 44,600. But the taxable income is different. The reason being is Karen won't have to pay tax on all of this. Okay, she shouldn't be paying tax on all of it. All right. Every person gets what we call a personal allowance. Okay, and in Karen's case here, she has a personal allowance of 7,475. In other words, this amount of her income, she doesn't get taxed at all. She gets to keep all of it. All right. So we need to work out what she's going to be taxed on. So taxable income, let's follow the formula, equals total income received, which you've already worked out to be 44,600, take away the personal allowance, which is 7,475. So work that out with a calculator. You get 37,125. So she's not going to get taxed on this amount of money. Okay, this is how much is coming her way, so to speak, each year. So she gets a certain amount from pension and a certain amount from other work. This is how much comes her way, but she doesn't get taxed on all of it. As I said, she gets to keep 7,475 completely. Right? She gets to keep that. Whatever's left over, the 37,125, she's going to get taxed on. That's what we call our taxable income. Okay, so for taxable income, there are certain tax rates. 20% of the taxable income up to 35,000 and 40% over 35,000. So for the first 35,000, she's going to get taxed 20%. You've got to ask yourself, is her taxable income above 35,000? And it is, isn't it? Her taxable income is above 35,000. For the first 35,000, she's going to get taxed at 20%. So we work out 20% of 35,000, which is 0.2 times 35,000. And that comes to be 7,000. Okay? So for the first 35,000, she's going to be taxed £7,000. Okay? Now, obviously, her taxable income is above 35,000. Right? There's a little bit more that needs to be taxed. Okay? Just think about the fact that we've taxed 35,000 of this. Okay, already. There's a little bit more left over, isn't there, that needs to be taxed at a higher rate. So what I'm going to do next is I'm going to work out the remaining taxable income. So that would be 37,125, take away 35,000, and we're left with £2,125. Okay, so this is how much she earns, or taxable income is over 35,000, and this amount is going to be taxed at a higher rate. If we go back to the table, the higher rate of 40%. 40% of taxable income over 35,000. So if we work out 40% of this, so that'll be 0.4 times 2125. That turns out to be £850. Okay. So, just to summarise, her taxable income is this, 37,125. For the first 35,000, she gets taxed 20%, which turns out to be 7,000. For the remaining amount, she gets taxed at 40%, which is 850. We can work out her total tax by adding these. Her total tax is 7,000 plus 850, which is 7,850. Okay, that's what her total tax should have been. But of course, if we go back, she actually paid 8,920. She has overpaid. Okay, and you can actually work out how much you overpaid. You know, it's important to put steps like that in. 8920, take away 7850. So she's overpaid by £1,070. Okay.